Welcome back. Here's a look at your closing numbers. Man, another bad day on Wall Street, especially considering where things were about 2 o'clock this afternoon. The Dow at one point peaking up 2.5% today, but then another major sell-off late in the afternoon. Both the Dow and S&P lost over 1.25 points for the day. This continues to be one of the worst months the markets have seen in recent memory. The Dow and S&P have dropped nearly 10% each since the start of this month. But Larry Kudlow, who was on the Steve Malzberg show, said it's not time to panic yet.
I would stay calm. I would avoid panic selling. You try to take a long-term view. Let me just say unequivocally right now, there is no catastrophe. There is no banking system collapse. In fact, I would argue there is not even a recession in sight, at least for a couple more years.
You can catch the entire interview at newsmaxtv.com. The Central Bank of China has cut interest rates in an attempt to support its struggling economy. The move comes after Chinese stocks plummeted 8% and 7% Monday and Tuesday, respectively. Saudi Arabia is looking to save money with oil revenue projected to decline even further this year. Oil prices have settled at 6-year lows. The Saudi government is reviewing its spending and could curb infrastructure projects. But it's not all bad. The Commerce Department here in the U.S. says new home sales rose by more than 5% in July. The rise in sales is a strong sign that the housing market continues to recover.
And Wall Street's stormy week continues to draw speculation on whether this is truly the calm after the storm or just the beginning of what's sure to be a very rough season. Joining us live with your market forecast is Tom Hutchinson. He is the senior financial editor of the High Income Factor. Thanks so much for joining us here on Newsmax Now. Good to have you back.
Great to be here.
Okay, so Tom, the market rebounded, the largest all year, before closing in the red. So does this mean that the worst is behind us, or should we expect more of a drop in the coming days?
Well, you never know, but to tell you the truth, I'm kind of expecting more. This isn't what the end of a drop looks like. I mean, the past 3 days before today were the single worst 3-day drop in terms of points in market history. It failed to answer that with a positive return today. So for that and other fundamental reasons, I think there's more on the downside here.
Well, billionaire investor Wilbur Ross was on Squawk Box, and he seems to believe we're just experiencing a market correction. Here's what he had to say.
What inning are we in, sir?
I think we're at least in the 6th inning, maybe the 7th inning. I don't think it's going to have a very serious downward direction from here, no. I think there will be lots and lots of volatility around whatever is the midpoint.
So you believe, what inning, let me ask you this, what inning do you think we're in?
I have a tough time with innings, but I think he's probably about right.
Yeah.
Look, this isn't 2007. It's not the financial crisis. It's not 1929. It's none of that. But I think it is a bit more serious than just a regular correction, because the market's repricing. With Chinese growth falling apart, it changes the dynamic, because now the global economy can't help us out. So the U.S. economy has to move along pretty much on its own without the global economy, without any fiscal reforms from the government, and without the Fed. So it's going to run on the fumes of the sweet spot of the recovery it's on for a while, but growth is going to be challenged, and the market's going to reprice that.
Well, you mentioned China. Tom, the fears leading to the sell-off are because of China's collapsing market. Here's White House Press Secretary Josh Earnest urging the Chinese towards financial reform. Take a listen.
They should continue to pursue financial reform to increase exchange rate flexibility and to move rapidly toward a more market-determined exchange rate system.
So now China has cut its interest rates in an effort to stimulate the economy. And investment guru Mohammed El-Erian also says the stabilizing the market must come from the emerging world. So what's happening in this emerging world, and how will it impact us?
Okay, well, basically, China grew at about over 10% for decades. Now they're the second largest economy in the world. You just can't keep continuing to grow at that pace forever. Obviously, they have to reform and turn into a different type of economy. And that's not a graceful process. And who knows the angst they'll go through en route to that. So it's a process probably going to take them a decade. What we're going to see in the meantime, who knows? But what we do know at this point is the growth is a lot less than what they said it was going to be.
Tom Hutchinson, senior financial editor. Sorry, didn't mean to cut you off or run out of time. Go ahead, finish your thought.
Yeah, with the growth not what we expect it to be, the global economy is not what we expected it to be because China's responsible for half of GDP growth globally. So that hampers our recovery because now the global economy is going to be a headwind and not a tailwind.
Gotcha.
And that lowers the prognosis for the second half of this year and into next year.
On that note, we'll have to leave it there. Tom Hutchinson, senior financial editor of the High Income Factor. Thanks so much for joining us. Good to have you. Coming up next on Newsmax TV tonight, former governor of New York, George Pataki, joins Steve Malzberg to discuss his take on Trump's immigration plan. And